All right, so the recording is starting. So what I'll do is I'll just go ahead and share my screen, and we'll just go through the PowerPoint. And like I said, most of you guys already seen this PowerPoint, so I just want to make sure, for the folks that haven't seen it, that they have a good idea of what I'm looking for in my strategy. All right. Can everybody hear me? Just somebody unmute yourself and say you could hear me.
Yeah. We can hear you.
All right, I should have had this mic a long time ago. All right, so scalping. All right. So anything you do in life, you must have goals, okay? So my goals in scalping is simple. There's no big, no big goals that you have to worry about. It's simple, straight to the point, and if you follow them, I guarantee you'll be profitable. 2 weeks ago I was able to turn $500 into $10,000. This week I was just telling the buddy I started off with 700, and right now my account is probably at 7,200. So that's all.
What the fuck?
Hey, watch your language. We're recording. So and it's basically with these goals. All right. Sometimes you see different traders, or you see people post, I've basically, had 100 pips or 400 pips, or, the pip count to me, and this is just my opinion, my goals, everybody's strategy, everybody's opinion is different. All I'm going to do is pour into you guys what I've learned in the last 7-8 months, and seem to be having some good success, from it. I think in the last 7-8 months of calling trades, I had 4 trades that didn't hit profit, that was negative, and about 300 plus. I stopped counting, to be honest with you. Almost 400 pips that actually hit in the positive. So I'm just going to share with you guys what I do and what I'm looking at, so you can actually be you could be listening, following with me. All right. So the goals I go for is basically minimum of 5 trades, with a stop loss and profit, of 4 pips. That's a total of 20 pips per day. Now, some people say, okay, 20 pips is not much. When you start to calculate these numbers, 20 pips can be a lot of money. If you trade in a standard lot size of $1, 20 pips is basically $200 per day. $200 times 5 days a week, that's $1,000 a week that you basically making off of $1 standard lot size. As you go up in your lot size, it gets fun. Like right now, I'm in a trade for $4. So basically 20 pips in one day with a $4 lot size is basically $800 per day. So as you start to compound and you increase your lot size, it starts to get fun. The money starts to really look good. So don't let the pip count confuse you. You just have to stick to the goals and basically compound your money until you get a larger lot size. All right, so with that goal, you have 25 trades weekly with a minimum of 4 pips in profit. That's a total of 100 pips per week. Monthly, that's 400 pips per month. All right, so just think about it. 5 trades, that can happen in probably 10, 15 minutes. Sometimes I can call 5 trades off of 1 candle, and basically you can hit your goal for the day. Sometimes I call 1 trade that can actually go 10 pips. So you may not have to do 5 trades. You can basically do 2 trades that hit profit 10 pips, and you basically hit your goal. So what I usually do, because all of us are humans, everybody have that itch. When you start to see you making so much money, or money in general, on a cell phone or on your computer, it's just like you want more. So what I do is, once I hit my goals in basically my account that I'm building, then what I'll do is I'll have another account, like when I have a scratch on my hand that I need to go in the market because I need to trade, then I would go on my other account, basically, which is extra money that I don't care about. If I lose it, I lose it. I use it for back testing. So you have to have, my goal is to have 2 accounts for everybody. So you can basically have one to be strictly focused on your goals, and then one when you have that itch. Trust me, everybody's going to have that itch because it seems so easy. So that's a recommendation for you guys also, all right? Now, the reason I scalp, so you have to understand you have different types of traders. Some traders are swing traders, some traders are daytime traders. The reason I choose scalping is because it's quick money. I do weekly withdrawals. It's fast movement in the market. So I can make money any time of the day with the scalping strategy. All right. So, like I said, if I'm just shooting for 20 pips, I want to be in and out. I don't want to be on my phone all day long waiting on the trade, or I don't want to be just, stressed out waiting on a trade to hit. A swing trader, they let the trades go and play out the whole week or sometimes a few weeks or a month. It could go long, but I want to be in and out. Most of my trades probably hit within 10 minutes. Probably 70%, 60 to 70% of the trades I call in scalping it usually hits in profit within 10 minutes. Sometimes it's 2-3 minutes. The other side, the 40% that doesn't hit, we're leverage right, so your account still would be able to hit profit, all right? So I use FinPro. The reason I use FinPro, and that's my FinPro link. If you guys don't have FinPro yet, you can basically take a screenshot of that picture, write it down, and then you can sign up on the FinPro to register, which is a broker. But the reason I use FinPro is because they have low commissions, the spreads are low, they reimburse you on your deposits. So technically, if you have all that stuff working for you, that's more money in your pocket. Just think about it. So the spreads is basically what you have to cover before you can actually go into profit in the market. So if it's low spreads, I can call 4 pips in profit because usually with FinPro, you cover about one pip, and you're basically in blue. All right. So find one pair and marry it. All right. The reason I did this with this strategy is because, the market moves pretty fast, especially when you're looking for, scalping setups. All right. So like today, they had news in Great Britain, that had the market, had GJ moving pretty fast. So for me to be able to jump in GJ and scalp, be in and out of the market, and then turn around and jump in another pair and be in and out of the market, that's too much to do when you're really in and out. I'm getting my money and I'm jumping out. So that's why I stick with one pair. And basically, you just married, every move that pair is going to do. If it spikes up, it has to correct. If it drops, it's corrected from a week or 2 weeks, a month ago. Every move that trade is doing, all right? Now, the reason I choose GJ is because it moves between 100 and 200 pips daily. So the more movement it has in the market, the more money you could the more times you could jump in and out the market to make money. Okay, so that's key right there. All right, so the 2 indicators that I'm going to go over, is that I use is the Ikimoku Kinko Hayo and the Bullinger Bands. So what I'm going to do right now, while I'm talking about the indicators, I'm going to go over a few things that you guys should probably write down on the Ikimoku Kinko Hayo, which is called the cloud. All right. Now the cloud is my main indicator when I'm calling trades. All right. And I'll show you guys, after I go through the PowerPoint, how to set up the cloud. All right. But technically, the Ikimoku Kinko Hayo, it basically means one glance equilibrium chart. Okay. Now you have 2 things I'm going to talk to you guys about this cloud. You have the Kijinsun. Forgive me if I'm butchering up these words. I'm Thai tongue, and then I can't speak that language. But the Kijinsun, which is KIJUN-SEN. And all I want you guys to do is right next to that, the blue line. I'll break this down to you in a second. The blue line. And what this does is the confirmation line for support.
Hi, David.
Yes?
Could you repeat that? Could you repeat that again, please? Spell it again.
It's called the Kijinsun, KIJUN-SEN. And then that's the blue line, and it's the confirmation line for support and resistance. All right. Then I want you guys to write this down. The Tekinson, Tenkan.
What the hell is this nigga talking about?
Can you mute yourself for me, please?
No.
All right. Tekinson, and just write down that's the red line. Red line. Okay. Now this here is the signal line, and this is going to be key to tell you when to buy or sell. All right. So if the red line crosses the blue line above, that's going to be an indicator to buy. If the red line crosses the blue line below,
So what's happening?
it's going to be an indicator of a sell. Okay? Just write this down and it'll make sense when I go into my chart in a minute. All right? So, come on, guys.
I just said it looked like it started to move, you know.
Can you repeat that?
Hold on, guys. So I'm trying to avoid muting everybody. If you don't have a question, just mute yourself. When you have a question, unmute yourself and ask the question.
Yeah.
Okay, 1 second, guys. I'm going to have to remove this
I
person.
this red now.
One second, guys. All right. So somebody wanted me to repeat that. So the Tinkinson is Tenkan
That's how you know.
-SEN. And that is the red line. And basically it's the signal line, and if the red line crosses the blue line above, that's a signal, an indicator that it's going to be a buy. There's a few more indications which I'll go over, but if it crosses below the blue line, then that would be a sell. All right. Any questions so far?
What size do you make your lines on your chart? Do you set those to a thicker line, or do you keep those thin?
Well, when I go into the charts, then I'll go ahead and show you that.
Okay, thank you.
All right. Does anybody else have any question where we at now?
I do, David. Can you hear me?
Yes, I can hear you.
Okay, so I need to know how you set your cloud up. What are the settings
When we go into the when I log into TradingView, share my screen there. I'm going to go into that. I just wanted to give the notes first, and then we'll actually go into to TradingView so you guys can see it. Is that okay?
Hi, David. I had to step away from the laptop for a second. Could you do the crossover again for me, please?
So
I'm so sorry.
The Tekinson, which is the red line, if it crosses over the blue line in an uptrend, that's a signal, that's an indicator that it's a buy. If it crosses below the blue line, that's an indicator that it's a sell. And there's some other checklists that I'll show you guys in a second. All right.
Hey, David.
Yes.
You say when the red line crosses over the blue line, so it doesn't matter if it's above or below the cloud, or?
No.
Okay.
And like I said, I'll show you some more indications so it's not just 100% that. You'll have some more indications, because here's the thing, you have to go off a checklist. So if anybody tells you that, basically a strategy is 100% guarantee, tell them they're a lie. Now, my percentage closing ratio in profit is about 97, 98. I had 4 losing trades in 7 months. So the thing is in trading, you have to, it's not about profiting and winning in every trade. It's basically profiting in more trades than you actually lose. Okay? Now, until you get to the point where you have a high ratio of like closing in profit. Does that make sense?
Yeah.
Like if anybody tell you 100%, you know, their system or strategy is 100% all good, just think about it. They could be billionaires instantly because they know what the market is doing instantly. So you have to find a strategy that's, you know, with a few different indicators that give you confidence in when you go into trade. That's all it is. It's basically a mind thing. All these indicators is basically a checklist for you to basically have confidence. So when you go into the market, you have patience to let the trade do what it's supposed to do. And you shoot to have more wins than losses. So that's where the back testing come in play. You know, I wouldn't tell you guys to go straight into a live account practicing a new strategy. I would tell you practice it, back test it on your demo account until you come to the point where you have, you know, I would say 60 to 40%, 60 wins, 40 losses. That's a pretty good ratio because that's 20% over in money you making. You guys following me? And then as you learn a new system, a new strategy, now you actually can, you know, increase your wins, increase your profits, where you have a higher percentage in profits and a lower percent in losses. So you have to understand that it's a mind thing. Don't think it's something that's going to happen overnight. You know, it took me about 3-4 months before I really had some confidence in calling trades. But after the more I call it, the more I got in, the more confidence I had. All right. Also on this cloud, if the blue line and red line is moving horizontal, that's a strong indication of consolidation. And that's going to make sense. That's going to mean something when we go over it, the consolidation part. If they're moving horizontal, that's consolidation. All right. And also the red line, which is the signal line, it tells you what the trade is doing. It tells you where the candle is going. And I'll show you guys that in a second. All right. Do we have any questions so far over anything we went over? All right, great. So this is key to your success in trading. Leverage. Leveraging is key, folks. If you start to get greedy, trust me when I say you're going to lose. You have to leverage right. Now, I tell you guys 200 to 400 pips, worst case scenario negative. You know, the 4 trades I call, the ones that basically lost, I think they lost at like 180 pips, or one was 200 pips. I've never seen none of my trades got stuck with 400 pips or more. But basically 400 pips is telling you that you're in a good space. You know, like you don't have to sweat. Like you can go to sleep with your trade running and not sweat. So for example, you know, I told you guys this week alone I took 700 and I have about 7,300 in my account right now. Right now, I'm still trading a $2 to $3 lot size. So for a trade, especially when I know the trade I'm in, I know GJ movement. If I go to sleep, the most GJ probably would move overnight is maybe 200 pips, worst case scenario. Now, if news popped out like last week, Great Britain, I think they had 2 high-name politicians that basically resigned, something like that. You know, we can't do nothing about that. I think that day it dropped like, GJ had dropped like maybe 300-400 pips overnight. Things like that, that's politics, that's the economy. We can't do nothing about that. But on a regular day, GJ is not going to go up or go down over 200 pips overnight. That's being proven unless something drastic happens. And mainly that's with any pair. You know, so you have if you trade in the U.S. pair and Donald Trump something happens in the U.S., that can affect your trades also. So, you know, in the legacy group, I asked, I think her name is Kava. Every morning she posts in there the red folders, which is the news every day. So what that does is that give me a heads up on being prepared for when news is about to happen. All right. But leverage is key, 200 to 400 pips. That means if you have $1,000 in there, you should probably be trading no more than probably, I would say 25 cents to 50 cents. Basically, if you're trading 50 cents, you only can cover 200 pips in the negative, because every 10 pips with a 50-cent lot size is $50. So 100 times, you know, 50 would be $500. So basically, if you have $1,000 in there and you're trading 50 cents, if that trade goes 200 pips, that will blow your account. With 25 cents, with $1,000 in your account, basically you can sustain. If 10 pips would be $25, 100 pips would be $250. So you can sustain 400 pips. Okay. Now people say, well, how do you make this money like this every week off of what you start with? So the key is compounding your money. And then when you compound it, so you compound it the right way when you start off with your money. So you follow leverage. Now, write this down or listen carefully. You follow the system, you follow the books in leveraging correct with your money. Everybody say, yeah, money, my money. So here's the thing. You're emotionally attached to your money. You stressed out if you go in the market with your money and you see negative. That's just human nature. That's the average person. That's anybody. So you follow, you play it by the books. You dot your I's, you cross your T's, you play it by the books when you basically trading your money. Now, that means you compound it. You compound your money. Now, let's just say you start off with 200 bucks and you do it the right way. You compound, you know, a day or two or a week, you just make it happen. You compound. When you get to the point where you turn that $200 into probably 400 or 500, what I suggest you do is withdraw your money back and some, and then trade in the market with the market's money. Now you're emotionally detached from the money and you're not stressed out because you already put profits in your pocket. And even if you want to increase your leverage at that point in time, then guess what? It's okay because it's the market's money. If the trade hits for you, then you capitalizing off of that. All right. So I'm gonna move a little faster so we can get into the charts.
Can I ask you a question real quick on that, David?
Go ahead.
As you're doing your leverage, and if you're following the spreadsheet, as that leverage goes up and say that, you know, now you're leveraging 50 cents, how long would you put that in? Because, you know, the leverage gets bigger and bigger. And if it goes the wrong direction, how long do you let that ride? Do you ever take a negative? Or do you always let it ride itself around?
So, okay. So when you compounding your money, so here's the thing. So you have different traders that post different spreadsheets. Basically, it's going according to your trading style. So you can't use a spreadsheet for a scalp trader or for scalping and taking a swing trade or vice versa. Okay. Now that spreadsheet can be adjusted. You can adjust the spreadsheet to whatever you want it to do. You can go there and basically do a 3 to 5% growth on your money and follow it to the T. Technically, that's really what you're supposed to do. You shouldn't be trading no more than 3 to 5% of your trading balance.
Okay.
Most spreadsheets that you see that's out there is not that. Because we're trying to get folks to hit this dollar amount, these figures faster than usual. But if you actually follow the spreadsheet the correct way that you should, you would be so comfortable where if a trade does go 200-300 pips, you have no sweat on your face. Does that make sense? Just think about it. If you have 100, if for every 1,000, if every 1,000 you have, you basically trade 1 cent, right?
Right.
And so 1 cent, 10 pips on 1 cent is basically $1. 100 pips on 1 cent is basically $10. Are you with me?
Yes.
So you divide that by $1,000, you're talking about, help me out with the math, over 1,000 pips or more. Are y'all with me?
Yes.
So it would really take you getting in a whole bunch of negative trades to blow that account if you leverage that way. Which, and that's the right way, but the money takes longer. I wouldn't say the money takes longer. The money that gets people excited takes longer. Does that make sense?
The 90-day spreadsheet that we have, does it leverage well? Is it something to be comfortable with?
It depends on so for example, this spreadsheet that I gave on the scalping strategy, that's because of my back testing, I would say that would be comfortable. So I basically back test and I basically called trades for almost 2-3 months before I even created the spreadsheet. So technically, none of my trades that I've called ever went over 400 pips in the negative. It's just basically me saying, hey, close this after 100 or 200 pips. So the spreadsheet reflects the trader, but technically most spreadsheets you see out there is not really the correct way to leverage trading in the market. It's really following the trader strategy. So you have to be careful. You have to be careful with the spreadsheets, especially if you're taking trades from other, a whole bunch of other people. You can't be taking trades from swipe trades, other telegrams. You can't be all over the place. If you get a spreadsheet from, let's say Jamal or Randy, then you just need to follow their trades and stick with their trades only, because their trading strategy is totally different than somebody in swipe trades. You see what I'm saying?
Right.
So you have to be careful with that. And a lot of people don't explain that. And the average person just gets in these spreadsheets and then they want to make this money and just jump in a whole bunch of trades as soon as they hear them call in the groups or the Telegram or the swipe trades or what you name it, that you jump in the trade. But you're going off of different spreadsheets. So what I would do is I would set my goal up. Sometimes I don't follow the spreadsheet until I get up in numbers in my lot size. If I say, okay, I'm gonna go ahead and if I start off at 500 and I want to basically double my money, I may basically start off with 15-20 cents for my lot size, right?
Right.
And I would increase it until I get to 25 cents. And then when I get to 25 cents, it's simple math for me. So I say, okay, well, I need 40 pips to make $100. So after I make $100, then I may go to 30 cents. Like this stuff I do in my head.
Right.
The only time I get to the spreadsheet is when I'm probably up like, $3 or $4 in my lot size. Then I start to I just check on it because my system, I like to withdraw my money every week. I love to withdraw my money every week. I figure out, yes, you could compound the money. Yeah, you could compound your lot size in the market for these 90-day spreadsheets. But if I can set a weekly goal, I did the math. If I could make, $1,000, per day, that's $5,000 a week. That's $20,000 a month.
Right.
So if I want to make $1 million from using the same spread and withdrawing every week, I just need to up my weekly goals. So I need to get to the point where I'm making $5,000 a week. $5,000 a day, $20,000 a week, $60,000 a month, $1 million a year. I prefer to do that and see my money coming every week than letting that money sit and ride and I get one bad trade and that blow my whole account or mess or throw me behind.
Right.
So that's why I'm so big on daily goals, weekly goals, monthly goals, is because I'm doing that on a daily and weekly basis. Just think about it. It's hard for somebody to say, hey, hit 90 days on this spreadsheet and we never done it. You see what I'm saying?
Right. Yeah.
So
absolutely.
you have to be able to do what you can back up. So I can back up weekly withdrawals. I get weekly withdrawals every week.
Yeah, makes
So
sense.
yeah, but you just have to you have to basically leverage, and that would be key. You would always make money leveraging. All right.
Okay. Thank you.
No problem. So 2 ways I scalp. I scalp on impulse and I scalp on the consolidation. Impulse is basically being patient, waiting on either news, waiting on the London breakout session or the market to open up. Scalping on the consolidation is when the market is just basically in the same spot. Like we talked about, the two lines are basically horizontal, and I'm looking at the chart right now and they're horizontal. So when we switch over there, you'll see exactly what I'm talking about. So scalping on the
David,
impulse.
I have a question.
Go ahead.
So is it good to scalp like during news?
Well, it depends. If your account is leveraged right, that's probably the best time because it happens so quick.
Okay.
But you have to be leveraged right, and then you have to wait for your checklist. So like for scalping, if I'm scalping news, I don't get into the trade until it already either shot up or shot down 70 to 100 pips. So I wait for that first before I would scalp on news.
Okay.
Because when it shoot up or shoot down, it has to correct itself. It has to correct itself. All right?
Okay.
So news is really good because you can make your money in seconds. You can make your money in seconds. And then today was like crazy where TradingView was ahead of MetaTrader 4. Man, I cleaned up on that. But I couldn't type that. I couldn't text it that fast back to the group. And I think I was able to get maybe 1 or 2 trades in that way. But TradingView was ahead of MetaTrader 4. So it would tell me if it was dropping. So I would just jump in as a sell. Then it would tell me when it was going back up as a buy. So, I mean, it was kind of like, it happens like that when you have some heavy news going out.
Okay.
Hi, David.
Go ahead.
I'm not getting your calls, and I'm wondering why. I heard you say earlier, you mentioned earlier that you had called several trades today, and I'm like, why am I not getting those? I sent you a while back my updated IML information, and you said you would get it over to Randy and that he was traveling, but I have yet to get anything. So what do you suggest? Because I'm like behind, because I haven't gotten any calls at all from you, Jasmine, or Jamal, nothing.
Okay.
So David, I can answer that because I happened to Javier today. He just sent the picture to Randy, and then when he sent the picture to Randy, all he had to do is click on the link that you sent him.
Okay.
Then he had access.
And I think also, are you in the regular legacy group? Because I think you have to put your number behind your name.
Number is, I do have my number behind my name. And I was with the old legacy group, but when he went and cleaned it up and said he was going to be opening up a new channel, I never got that information.
Okay. Well, just message me after this, and I'll send it to him and see if he can add you. I know he is coming back from Africa, so I know he'll be back in the U.S. I think this week.
What is it you need me to send you, David?
Just send me a message, and then I'll send you the link.
Okay, very good. Thank you.
No problem. All right, so scalping the impulse, you basically 70 to 100 pips before you enter. You're entering on the correction. Most people will say you're trading against the trend. No, you're not. If you have a plan, your plan is to basically get 10 pips off of the correction. So 70 to 100 pips, you just need 10 pips. Because remember, we go back to our goals. We're not trying. So most persons will wait. They want to make that 70 to 100 pips, right? Which is good. That could be their trading style. But scalping is in and out. So I'm waiting to get that 10 pips on the correction or 20 pips on the correction. All right. Most of the time I'm trading on the 15-minute time frame, but I do check all of the time frames. Okay. Scalping on the consolidation. All you're doing is you find the highs and the lows and you make sure it's at least 10 to 15 pips. And that's when you enter in the direction of the trend. All right. 10 pips. I use that because it's quick money and it moves fast. And I started with that with Dr. K. So that's why I use 10 pips and dip on that. Now, 4 pips stop loss and profit. This is going to be key in basically scalping. For me, it's key in any trade you get into because once you put your stop loss and profit, it's fair game. You basically won that trade. Regardless of what happens, you're going to come out in profit. So once the trade gets about 4 or 5 pips in profit, you throw that stop loss and profit because remember, you're using FinPro or you're using a broker with low spreads so you can get into profit after basically 1 pip. All right. Once you get that stop loss in profit, you just do a trailing stop loss until it hits 10 pips. All right. If it's moving too fast for you, just think about it. Remember when the cell phones first came out? You know, you had the Nokia, then you upgraded to the where you could open up and you had the screen and the buttons. Now you have smartphones, right? It took you a while to learn how to text message, but when you start to text, you can move a lot faster texting. So it's the same thing with putting your stop loss and profit. Being able to modify a trade that's moving fast and putting your stop loss and profit, it happens so fast. You have to be pretty quick with your phone. Or if you can't do that, I just tell everybody, close your trades in profit and wait for the next one. So if I call stop loss and profit 4 or 5 pips, just close the trade. You got 4 or 5 pips and wait for the next one. All right. Just remember, any profit is good money. Anytime you make money in the market, that's money you didn't have. All right. So let me go ahead and stop sharing the screen here. Let me answer any questions before I go into trade review till I go into the chart. Do we have any questions over anything we went over so far? Everybody's good?
No, I do. I do want to confirm real quick. So when you're scalping on the consolidation and you say find the high and the lows at that point, so you're just pretty much looking for the highest number price, I guess, at that point, and the lowest price and trying to get in at the high?
Yeah, so we're looking at the candles. We're looking at the candles on the high and the low. And there's an indicator called the Bollinger Bands that you can actually use that would basically measure the high and the low. I'll show you guys that in a second also. And what you do is, if let's say the trade, the pair is a downtrend, it's clearly a sell. Everybody sees as being a sell is a sell, right? Mm-hmm. So if it's consolidating is just basically a straight line horizontal, right? Mm-hmm. So in that consolidation, you have the highs and the lows in the candle, right? So you have the high tip of the candle, you have the bottom of the candle here, right? Mm-hmm. But it's just moving sideways, horizontal. So if it's a downtrend where it's a sell, you want to try to get in as close as you can to the top of that high, right? And then you enter as a sell, and when it comes down, if it breaks your low, it's a sell. So it's going to break it in the direction of the trend. Does that make sense?
Yeah.
And then vice versa. You know, if it's a buy, you do the same thing. Now, the good thing about the consolidation is you could jump in that trade, you know, all day long until it breaks out. Because the consolidation, like I'm looking at GJ, it was consolidating, you know, today on the 15-minute. It had about probably 12 candles on the 15-minute. And then I'm looking over here, it had another maybe 20 candles. So you can get in every time it goes to the high, come down and close out 10 pips or even 5 pips, and then you keep on repeating it. Because when it breaks out, and this GJ is breaking, I'm making money right now as we speak, y'all. So this GJ is actually, I lost my train of thought. Hold on a second. So what was I saying? Sorry about that.
You want to tell?
Sorry. Okay, so yeah, so if it breaks that consolidation, it's going in the trend that you already know. All right.
Which is a
So
sell?
consolidation is where you actually can go in the market any time of the day. Because keep in mind, the market is doing two things. It's going up, it's going down, and then it's moving sideways. Right?
Mhm.
So if it's moving up, that means it's what? A buy, right?
Right.
If it's moving down, that means it's a sell.
Right.
If it's moving sideways, that means it's consolidating. So the consolidation part of the market, when you find your high and your low, is where you can go in the market any time of the day on any trade and basically go in there and scalp. You know, some traders, they mark the charts up and then they have to wait for a setup. You don't have to do that with scalping. You can go in any time of the day and basically go trade and make money. When it's going up and down, that's the impulse for scalping. When it's moving horizontal, that's basically consolidation. All right. Any questions before I go into trading view?
Yeah, you in it for a sell it.
I ain't calling no trades right now. Pay attention.
No, I in the blue.
I'm in there for a sell. And I'll show you guys the confirmation where we went over why it is a sell right now. So let me go ahead and share my screen. No questions before I share my screen, right? Everybody
Can
good?
you show because I'm still like the consolidation throws me off.
I'm gonna show you it right now.
Okay.
All right, let me go ahead and show it for you. I told you this here, you guys did a good deed today. Y'all gonna pick my brain and y'all gonna get everything y'all need to know answered. Are we good with that? Y'all good with that?
Definitely.
All right.
Yes, sir.
Yes.
Let me see here.
Yes, give it to us.
Yes. Can y'all see my screen?
Yes.
Yes. Yes.
All right, so I'm gonna break this cloud down to you. Well, first off, let me go ahead and if you guys you could write this down or record this or however you want to do it so you can know how to do it. Change your indicators. All right. Let me go ahead and delete this off first. So this is just the naked chart, right? This is my lines I have. I need to keep this line here. All right. So indicators.
Are you trading from Trader's View?
I use TradingView to basically look at the charts. But 100% of my trades I call is on my cell phone.
Thank you.
So even on my phone, I'll have TradingView on at the website looking at it, because MetaTrader 4 is behind sometimes, and then I'm used to looking at TradingView. But if I'm at work in my office, this TradingView is the only thing that's on my screen. If I'm at home and I'm trading, I got 3 computers in here, 3 screens, and all of them on TradingView. So TradingView is where I basically look at what's going on. But all my trade is from my cell phone. So indicators. What's the first indicator we talked about?
Cloud.
The cloud. Ikimoku cloud, right? So that's the first indicator we talked about. Now I also use I also use the RSI, which I'm gonna add this and I'm gonna show you guys here. This will help you guys a lot. I think I showed I think he's on the call, Rashad, how to read this RSI, and it was already here. Let me see. All right, so let me go over this RSI really quick. The RSI is basically the relative strength indicator. All right, that's the strength of what the trade is doing. So write this down. If the RSI is over 70, That means it's overbought. So if something is overbought, what do you think is about to happen?
Drop.
Gotta
Okay.
sell.
So anytime you see it over 70, so you see, right, so the bottom here is the RSI. That's an indicator. So on my cell phone, I have it as my second indicator. So you see over here where it says 70. If you see this line here, like for example, over here, today, it was right at 70. Earlier this morning, same thing. That's why you saw I was calling a sell, because I know it had to drop. And then guess what? It dropped down here, bam. Came here, dropped, and it's been dropping. But it looks like it's going to come. So this goes with the candle, the active candle. So anything under 30, which is down here,
Is underbought.
is oversold. So if something is oversold, what does that mean? It's about to go in a buy.
A question, David.
Go
What
ahead.
is the sentence for your RSI?
Let's see here. I'm trying to see. Y'all can see what y'all do. Y'all see this? My Zoom thing in the middle of the screen.
Yeah.
Let me move this. Hold on. Okay. So RSI setting right there. Take a picture of that.
Wait.
Okay,
Everybody have it?
Got it.
I have it.
All righty. So that's all you need to know about the RSI. If it's over 70, if this line here is over 70 or close in that vicinity, that means it's overbought. If it's what's going on?
Oh, wow.
Hold on a second. My TP about to hit. So this is my TP here, 45. And I'm gonna show you guys that in a minute. Why is this thing marking up? Y'all see the red line on my screen?
Yes.
Yes.
Yeah.
What is going on? Hold on a second. I don't know what that is.
I think you have the market thing highlighted.
Oh.
Yes.
Okay. I'm sorry. Let me. Why is this still on?
You have to go down to the one at the end and say remove drawing tools.
I think it's on your Zoom.
I think it may be on my Zoom too. Is it? Hold on, let me stop sharing for a second, guys. I'm human. Okay, 1 second. Yeah, that was the Zoom. All right. All right, so RSI under 30 is oversold. Over 70 is overbought.
Overboard.
All right. That's all you're looking at on the RSI. So all that is another indicator for you. So I'm gonna give you guys my checklist on my indications before I call a trade. So the RSI is one of them. Now, do you guys need to?
Could you say that? I hate to interrupt you, David. Can you say that again? You said 30 and 70, and just
Over
explain to me again which is.
Over 70 on the RSI means it's overbought. That means if something is overbought, that means it's about to go into a sell.
Okay.
Sell, correct.
And if under 30, it's oversold. So that means it's about to go into a buy. Now that's just an indicator. All right.
Thank you.
So let me go into the cloud. You guys need to see my settings for the cloud also.
Please.
Go ahead and take a picture.
Okay.
Or
Hold on 1 second, please. Okay,
Everybody got it?
I got it.
Got it.
All righty. So the cloud.
Mhm.
So first thing I do when I'm looking at it, now I do check all the time frames, but because I scalp on the 15-minute, that's what I've been used to, so that's what I stick to. So the first thing I do when I get into this chart, first thing, write this down. First thing is find the trend of the trade. Find the trend of the trade. So, and everybody already have the cloud on their either their cell phone. You can have this on your MetaTrader 4 also. Everybody knows that, right?
Mhm.
Okay. So the trend of the trade. This cloud here is basically a buy uptrend. The blue cloud. Everybody see that?
Yeah.
That's an uptrend. The red cloud is a downtrend. It's bearish. All right. We go back. Same thing. Blue cloud, uptrend.
Know where it is?
Red cloud,
You gotta know where it
downtrend.
is. It must be in this closet or somewhere.
Oh, we have some y'all with me? All right. Blue cloud, uptrend. That red cloud, downtrend. So
Mhm.
the first thing you do, first thing you want to do is find the trend of the cloud. All right. That's indicator number 1. All right. Indicator number 2 is them foreign words we talked about, the Tekinson and the Kinjinson.
Kinjinson.
All right. So we're going to zoom in. Now, hey, when this hit this 45, don't get upset if I start making noise. I'm going to be happy.
Go right ahead.
That's going to be my goal. All right. So somebody help me out. What did we say about, what is the blue line?
Kinjinson.
Okay. And what does the blue line do?
That's the confirmation line.
Okay.
It's
And the
like the
confirmation
signal line.
Support and resistance.
Okay. And the red line is what?
Tinkinson.
And what does that
That's
do?
the signal line.
That's the signal line.
I like y'all. I could do this more often.
Yes.
So let's verify these things, okay? So this is the blue line right here. You guys see it?
Yes.
And this is the red line. You guys see it?
Uh-huh.
You have the same setting on your phone. All right. So we said, but the red line tells the story. Now, before I even tell the story, you guys see how it's kind of horizontal, right?
Yes.
And you see what's been happening. Basically, consolidation.
Mhm.
Okay. So the red line tells the story. Everybody see here. Basically, the red line, you see where they cross here. So this is a cross, right? Let's go back. Hold on 1 second. Things are not dark. Oh, baby. I'm 4 pips away.
Where she dropping it?
I'm 4 pips away.
Yeah.
All right. Hold on. I'm trying to check my phone. 1 second, guys. Let me see something. Okay. I think they have it opposite. Let me go in my settings. Let me go in my settings. Y'all see that? Y'all see that say all blue, right? It's a happy camper right here. Okay. The settings are different. The blue line is different in the settings. I'm looking at my phone. That's all I can tell.
Okay. What?
So the blue line should be red. And then this red line should be blue.
Oh.
Because I know I was looking at it. I'm like, okay, there you go. That's it there. So go ahead. Let me open this up for you guys.
Can they
Retake the
put that
picture.
back up there?
Yeah.
Okay.
Let me know when you got it.
I have it.
Got it.
Got it.
Thing here is looking sweet. All right. So this is what we're looking for. So, and you have to do that with TradingView because it defaults it. So that's why I basically looked at my phone to verify it. All right. So first thing we do is we verify the trend, right?
Yeah.
So if I was to look at this, I was to come into this, what would I see? What kind of trend is this?
That's an uptrend.
Uptrend.
Okay, so you see it's been going up all day, right?
Mm-hmm.
So now I'm looking at it to correct itself because if we come back here, the RSI was about what?
70.
Look, almost a 70, right?
68. 9.
Yep, so close to 70, where we had this
Right.
area here where it took off.
Mm-hmm.
Okay? Same thing here. If we come over here this morning, where it was over 70, it took off. Y'all see it?
Right.
Mm-hmm.
So yeah, it's an overall uptrend, but when it got to being overbought, it had to come down. It consolidated up here, but then it came down. And it shot up again where it was over 70 or around 70. Now consolidating, now it's coming down. It's making its way down, right?
Mm-hmm.
Right.
So I would say this would be an uptrend. So I have to have more indicators going in my favor with the indicators I'm using. So the indicators I say I'm using is the cloud, which is the Ikimoku cloud, the red line, the blue line, and the RSI.
Right.
All right. So if I go from the RSI, basically the RSI is coming down to 30. So it's soon going to be oversold. So soon this is going to probably turn back around and correct itself to go up and then probably continue down before it turns into a sell trend. Okay. But this is where I came in because of this cross. So you see here where the red line and the blue line cross here.
Mm-hmm.
When it crossed below, it started to come down. Let's go over here. You guys see here where it crossed?
Mm-hmm.
It crossed above, and guess what? It started to go up. I can do this all day, and it'll be the same thing. Right here it crossed, the red line crossed above. Guess what? Started to go up. I can go back some more. Let me know when y'all want me to stop. It crossed here, it crossed above. Guess what? It went up. Are y'all see what I'm seeing?
Yeah.
Yeah, we're seeing that.
So the red line tells the story. But you don't want to put your whole fate in calling a trade in just the red line. Because you would get blown out. You'll get fake out. That's why it's called you have a few indicators, all right? So another thing, if you're on the 15-minute chart, you see there's a timer on every candle, right? You see it counts down. So every candle, each one of these candles is 15 minutes. 15 minutes, 15 minutes. If you switch to a different time frame, whatever time frame you go, each candle is that amount of time. So there's a counter. It counts down from 15 minutes down to 0, and then it starts a new candle. Every new candle, these two line changes. The red line and the blue line changes. Now, the red line is the signal line. It will tell you where this candle is going to go. The only way it won't if it's so far apart from the blue line. So right now, they're basically consolidating. That's why all we see is consolidation. Make sense?
Yeah.
So it's horizontal. So we're not going to see too much action until probably, tonight. Now, Tokyo just opened up, so we may get a little speed, but probably the market is probably going to start moving about 2, 3 o'clock in the morning. That's going to consolidate. It may break the cloud, but you're not going to see much. All right? So this signal line, I want you guys to just look at that when you're looking at your trades from here on out. If this signal line is pointing in the downward direction, that's a confirmation for you that it's confirmed that it's in a sell trend. If it's pointing in the upward, that's another confirmation that it's in a buy. So this, you looking at two things, red cross, and you're looking at the tip of the signal line. Does that make sense? Every 15 minutes, you'll see the signal line change. It may, if it just shoots over more to the right, it's still consolidating. All right. And then we could go deeper into the cloud where, you know, if it breaks out of the cloud, you wait for the second candle in the same direction and to confirm it's going to go down. Or if it's a buy, let me see if I can find one here. You see here where it broke through the cloud in a buy trend here, you wait for the second candle to finish, and that confirms it's going to be an uptrend. Y'all see that?
Yeah.
This is all in Dr. K training, you know, that I learned in her class. Let me see if I can find another one. You see here where it started to go through, but then it came back down, and then this candle here finished as a sell, and then it kind of went down, but it consolidated a little bit, so that didn't have too much action. Let's see if I can find another clear one.
Hi, David.
I'll go ahead.
With the, I don't remember those Japanese terms and whatsoever, but also with watching Dr. K's training with the red and the blue line, I would look at the blue line as being like the stop, like my stop loss line.
Yeah, it's supposed to be the stop loss or the trailing stop loss. And then you also have the green line, which is the Chico span, but I don't use those two in the scalping strategy because I don't use stop loss.
Okay, no, I mean,
go ahead.
Can I finish? Okay, I just me looking at it as saying that taking into consideration like the blue line is like my stop loss, and so the red line being the price where the market is going. So the price, and so whenever it is that my blue is below my red, I know that I'm in a buy. I'm looking at that as a buy. Or if my blue is above, then I'm looking at that as a sell, because I don't remember those Japanese terminology.
Yeah, that's all I do is I say red and blue.
Yeah,
red and blue because that's the quickest way you'll understand it.
Very much so.
So yeah, just as long as you can realize red under the blue is a sell or red above blue is a buy, you're good.
Yes.
All right. And like I said, you don't want to just use that one.
No,
because
no.
you can get you could get fake out of the market.
Yeah, that's just one of the many.
All right. All right. Anybody else have any questions?
I do. Can you just spell the names of those lines again, please?
So the blue line is the Kijun Sun, KIJUN -SEN.
Okay.
And the red line is the Tekinson, TENKAN -SEN.
Got it. Thank you.
All right. Anybody else have any questions so far?
Yes. So if we're going over the checklist, the first one is to find the trend of the trade, which is by the cloud. Correct.
Yeah.
Which is like a uptrend. Then the next one is to look at the red and blue line.
And
okay,
so the next one would be the red and blue line, which we just established. And then the last one would basically be this RSI.
Okay.
All right. Now, here's the thing. The reason I use one pair is because I know the movement. So if I knew it came down from a downward trend here, right, which was probably this week or last week, and then all of a sudden it hit an upward trend this week, you have to be ready for it to go back down and break into downward. So that's what we're looking for here. So, and even so, it could be an upward trend and you can get in real quick when it crosses. You just have to have your indicators. If your RSI is pretty high and you see it cross, then you can jump in as a sell and catch it as it's going down. So right here, I'm looking for this here. Is either going to do two things here. And this is why you have to have a few indicators and not just one. Because the person that's reading this is going to say, okay, maybe now it's going to break through the cloud into a sell trend, right? Typically, that's what I would think also. My confirmation is it crossed under the red line, under the blue line, so it's going in the downward trend, and it is overdue to basically break this cloud. But what I'm scared about is my RSI is too low. My RSI right now is about 39. So this could be a fake out where it comes in the cloud and you think it's going to break it, and then it just continues to go back up.
Do you wait on all three signs, David?
It depends on what I'm looking for. Like, for example, if the RSI, I think if I have the red line crossing under the blue line as a sell and my RSI is 70 or around 70, that's pretty strong for me to jump in as a sell.
Okay.
Or, for example, if my RSI is below 30 and the red line crosses above the blue line, I may go in as a buy. I won't really pay too much attention of the cloud. So I would really say the my strong checkpoint is the RSI and the red line. And this here is just really understanding the cloud. Not to the T, but to have a basic understanding. So even when I'm scalping the impulse or I'm scalping the consolidation, I have an idea of where I need to go in a buy or sell. So, there might still be a whole lot more into this cloud training that you probably, I have a video I could post, but that's an hour video, which was helpful also. And then also Dr. K training.
Hey, David. Melissa had a question. She asked, do you use the wick as the indicator?
The wick? No, only if it's basically the scalping the impulse. The wick, I don't use, the double tops. I kind of look at market structure where I can look at the zones. When I'm looking, like, for example, I would just go back maybe a few days or a week at the zone. So if I'm over here, like, for example, when this shot up here into a buy from here to there, I think it was dropping today and then it started to shoot up, right? So then what I would do in that case there, I would go zoom back and I would look and see where's my next zone from this on the 15-minute. So I look here, this is where I was at. So I look here and it was above that. So I go back some more and you see there was a wick up here. So when I jumped in that trade, or if I was in that trade, I would make sure my account could sustain if it went up to 145.93 from where it was over here. You see what I'm saying? And then I would be prepared to see where was the next spot where it came from. So remember when the news came out with the politician, that's when it took that big drop. So it haven't corrected itself from there. But this was that big drop. So the only time I would use the wick is when I'm really looking back to the next zone to see if I can sustain where it's going. Does that make sense? Yes, no, maybe so.
Yes.
Yes, makes sense to me.
All right.
Yeah.
So that's really what I do when I get in the scalp. I'm basically prepared before I even get in. If I'm trading the consolidation or even the impulse, I'm prepared. I look back at the next two probably highest zones, and that's where I basically make that decision if I'm going to go in, because I need to know if I can sustain, that pullback. Worst case scenario. You always have to be ready. Worst case scenario.
Okay.
You have a best case, which is hitting your pips really quick, but worst case still needs to be a winner for you. Does that make sense?
Mm-hmm.
All right. Any other questions?
So can you give an example on a consolidation? Like if I'm
All right.
looking at it, and how does that work?
Okay, so let me move this here. And I'm gonna keep this here. So consolidation, right? Remember we say the market is either moving up or it's moving down or it's moving sideways, right? Sideways, consolidation, consolidation. This here is consolidation. So let me move this here and I'll show you. So if I was looking at this right here, this is what I would do. I would say this would be my high right here. And then I would come down and I would say this would probably be my low right here. Hold on a second. And this is just short-term consolidation, guys. So what I'm looking at is in this area here. Hold on. I'm looking at this area here only, right? Everybody see that?
Yes.
All right. So I have 145.687 and 145.842. So that's about what? Do the math. 68, 78. That's about what? 14 pips, 13 pips, 12? I don't, y'all help me out.
68.
68, 78, 80. That's 16 pips, right? So what in the notes we said how much for consolidation? 10 to 15, right?
10 to 15.
All right, so if I was going into consolidation and I went off of my checklist. So for example, let's just say here earlier, this is when it went through that shut up, right? So that means my RSI was pretty high. So I was waiting for it to basically go into a sell. So what I would have done here in this consolidation, when it got here, this green candle, I would have jumped in for a sell, all right? So if I were to jump in for a sell right here, and then I go for 10 pips, so that's at 81, I would have come down at 71. This would have been my TP right here. You see what I'm saying?
Yes.
So let's delete that. So let's say, so bam, TP would have hit right here on this third one, right? Now, keep in mind, we're scalping. So scalping doesn't mean we're waiting for 10 pips to hit, right? What does scalping mean for us?
We want at least
Y'all might not need me to do no more training. Yeah, be giving y'all everything.
You're awesome.
So thank you. So all that means is we just need 4 to 5 pips out of here. So let's just say we got in here at 81. 4 pips would have been what? 77, right? 77, which would have been here. And yeah, it could have ride down to our 10 pips, but if it didn't, it would have knocked us out in profit at 4 pips or 5 pips. Then guess what? When it comes back, what we do? We re-enter and we ride that thing over and over and over until we get what we want out of it. Until it finally come down and hit the low. And then we wait. And then when it started to go back up again, we check our RSI. We kind of check the red and the blue line. You see how they're kind of separated now? So it basically here would have been more of a buy because it crossed right here. It would have been more of a buy. But the only reason I would have went in as a sell would be because I saw my RSI. If this RSI was lower, then right here in that consolidation, I would have went in as a buy because my checklist on the cloud is an uptrend. The red line crossed over the blue line as a buy. But then I would have needed my RSI to be a little bit lower. And then I would have basically went in this consolidation as a buy. Y'all see what I'm seeing?
Yeah.
So here's the thing with consolidation. Consolidation is really not 2 or 3 candles. You have to wait about maybe 3, 4, kind of see where it's hitting the high, hitting the low. It's also, let me go ahead and put this in for you guys so you can see.
Hey, David, I want to ask something too. Oh,
Go ahead.
I understand the red and the blue lines now that you're talking about, but did you, I always hear them talk about the EMA, the moving average. So you do not use that on your 15 minutes. Is that correct?
I used to use it, but I basically took it off because I didn't want too much indicators.
Okay, because yeah, it would be confusing if it was there. Okay.
Yeah, you don't even need about maybe 3-4 indicators the most.
Yeah, okay.
And indicators could be market structure too. It could be support resistance. It could be zone to zone. So I use support and resistance. I use zone to zone, but I just use it to see where it's going or where it came from. I don't basically dwell on hitting one zone to go into the next zone. I just use it to basically give me confirmation. So if I'm using market structure, and then I have the RSI, I have the cloud, you don't want to confuse yourself with too many stuff. Now, what I just put here is called a Bollinger Band. Let me go ahead and show you guys the settings so you guys can take a look at that.
Got it.
So do you I have a question, Dave? So do you enter at the, like, is your entry point is at the crossover?
Say it again.
Is your entry point is at the crossover?
Okay, let me hold on one second because I took the cloud off real quick.
Oh,
Let me just go over this part real quick.
okay.
So this here is the Bollinger Bands. It basically measures the high and the low for you and compound it in the box for you. So anything in here is basically the highs and the lows. That's all this does, this indicator. So if you come here, you know, it would, you know, you can tell your high would be here, your low would be here, and this would be consolidation. So I can do this from just looking at it. You know, like here would be straight consolidation. This is the high, that's the low. Basically the line I drew, that's all this do, measure the highs and the low. It's called a Bollinger Band. So if you want to scalp consolidation strictly, then highs and low, that's all this does. If it does an impulse, it'll open up. And when you go to consolidation, high and low, high and low. You can basically pick and choose your battle.
Okay, David, so I have a question on the indicators menu. When you drop down, there's like 3 or 4 Bollinger Band options. Which option?
I just used the first one, the regular one.
Just the first one, the regular one. That's it.
Yeah. Did you get the settings from it?
I did. I got the settings, but I didn't see you click on that one, but I did get a picture of the settings.
Okay, perfect. So that's all. If you just want to go and trade consolidation, which is pretty cool, you can use Bollinger Bands and it measures the highs and the lows for you all day long. All right.
So, hello.
Go ahead.
So inside the Bollinger Band, you said that's the indicator for high and low, like inside the lines and that blue.
Yeah. So you see my mouse here to the top of the line.
Yes.
You see it's drawing. These are the highs of all these candles.
Okay.
The bottom is the lows of all the candles.
Okay.
So that's all this indicator measures, the high and low. So if I was over here and I wanted to get in a trade, basically, and you could add the cloud along with this, but it's so many lines, it'll make your thing look like a coloring book. But basically, it would tell you, okay, this is my high, 144.98. This is my low, 144.80. So that's about 18 pips in there. So if you trade in the consolidation, you can basically catch 10 pips in and out.
Gotcha. Thank you.
All right. This is huge also. All right. Let's see. That was Shamika who had the question?
Yes,
David,
Shamika. Yes.
I'm sorry, go ahead.
Go ahead, Shamika, and then I'll get to the next one.
So I was just asking, like, so at the crossover with the red and blue line, is that when you enter? Is that like your entry point?
It just depends on everything else. because remember every new candle. So I'm gonna show y'all something. It didn't. It meant to do the default. 1 second. I'm gonna show y'all. We should be on this for 5 minutes. Somebody remind me if I forget. When this timer is in like 20 seconds or less, we're gonna zoom in, and we're gonna look at this signal line, and you're gonna see it change when the new candle comes out. All right. So if I forget, remind me. All right. So the signal line tells the story. Okay. If the signal line shoots up, that means the candles are shooting up. If the signal line is shooting down, there is one here. Shooting down, sell candles follow. All right. If it's horizontal, it's consolidation. So basically, you guys see we've been on the call for a few minutes, and you see the last 1, 2, 3, 4, 5 candles has been straight consolidation, right?
Yes.
That's because the lines are what? Horizontal. It tells the story. So you guys, people say, well, hey, send some more pips, send some more pips. Man, I'm picking my battles wisely. I like to win. That's if you're going to fight. If you're going to fight with somebody that's twice your size, you're going to think twice about jumping in that fight. But if you go in a fight with somebody that you're twice their size, man, you're going there with confidence. Like you ready to box them up. So I have to make sure that I'm good on my indicators when I'm going in a trade. So when I'm talking smack in the group or saying, hey, y'all want more pips, y'all want more pips, it's because I'm looking at this stuff and I already know what's about to happen. It's like I could close my eyes and I know what the trade is going to do. And that's because most of the indicators are either confirmed or, all of them. Man, it's like go when everything is checked off. So it tells the story. We got 3 minutes. It tells the story. So by the time it's even crossing over, you already see what's happening. So let's go back here, Shamika. It crossed about here, right? Then it went up. It worked the way, and then it started to consolidate, right? So at this point of consolidation, you can see after every candle, the blue line is going to it was making its way up. So if it was consolidating here, bam, bam, right? Let's remove this so I don't confuse you. So this is the red line, this is the blue line. It crossed over here. It worked its way up, and then it consolidated, right? When it crossed, the blue line was straight consolidation, right? And then when we got over here, what happened? As the candle changed, the blue line started to work its way up. So at this point here, I was getting ready. I was getting ready for that cross. So when it did cross and it confirmed that it crossed, bam, enter as a sell. It tells a story before it even happens. If you're patient enough to let it happen. If you're not patient enough to let it happen, then guess what? You're going to mess up your indicators and everything you learn, and you're just going to be gambling. And that's not what you want to do. So you just let it tell you the story. So like, for example, here, it's consolidating here. So we have 1 minute and 40 seconds. We're going to see what happens. If it shoots over more consolidation, then we still have to be careful because guess what? Remember, what trend is this cloud?
Upward.
Is an uptrend. So this could be a fake out for a lot of people. People could think it's about to break through, but what if it's consolidating now? What if the red line crosses this blue line now? Now we stuck like Chuck because here's the thing. The RSI, it was just at 38. Now it's at 43, right? So it's pretty low. It's still an uptrend. So the only thing we're missing right now for this to go back into a buy is what? The red line across this blue line.
Yeah.
If this red line crossed that blue line, then is back into a buy. Because everything checks off as a buy.
35 seconds.
Oh, perfect. Let's see. So we're gonna zoom in, and I want y'all to look at this blue line and the red line, and when it hits the new candle, you're gonna see that move. Somebody sound like they're learning something.
Come in, Clara.
You got 10 seconds. What happened?
It's still consolidating.
Still consolidating. So what that means, if we was trading consolidation, we could still be in there getting trades on scalping the consolidation, right? That's how you know what you do. That's how I can go in the market any time of the day and call a trade. So the only thing I would be careful about right here is if this crosses the blue line, then I'll be kind of worried, because everything else will be checked off as a buy.
So how long do you wait?
Well, you have to depending on the pair you're trading, you have to know the peaks. So for this trade here, the peaks are this Tokyo session and the London breakout session, right? Which is 3 o'clock in the morning Central Standard Time, which is the LBO, London breakout. Tokyo, I think it's 8 o'clock Central Standard or 7 o'clock. So if it's not those two sessions, then guess what? The market is not really doing too much. Just think about it. Remember, they say the banks trade your money while you sleep. You have more movement in the market when the average person is asleep or not worrying about trading.
So like between 3 to 7 a.m.
Yeah, I think I wrote it down. The best time for me is 3 a.m. to 11 a.m. trading GJ. Depending on the pair you're trading, you have to find the pair you're going to trade. But 3 a.m. to 11 now, I like my sleep, so I start waking up early, and I just get my pips between 6 and 11 on my way to work and while I'm in my office, because I can scalp and go in the market any time of the day.
David, you on Eastern Standard Time or Central?
Central.
Okay.
I know that voice, so I'm an hour behind you.
Yep, I know. Thanks.
All right, but yeah, so that's really it, man. I mean, consolidation. Y'all saw the consolidation. Oh, should I go over the impulse? Do you guys need to see the impulse?
Yeah, please.
Before I go over the impulse, because the consolidation is more in depth. The impulse is strict. It's just, I mean, you could teach anybody the impulse. Any questions before we go over the impulse? Everybody good?
So what are the numbers for the RSI like between? So like we know if it's over 70, it's overbought, and it's under 30, it's oversold. But like if it's in between what and what numbers that like you can still say no, that's too low, or that's too.
I mean, I would just say if it's close to 30, then it's close to being oversold. If it's close to 70, if it's in the middle, then you really can't really watch it. I mean, you can watch the direction it's going. Like, for example, it's shooting down, so that means it's getting to be oversold. The tip of this is going along with the candle. So whatever this candle is doing is what is drawing the RSI.
Okay.
All right.
Do you always make your decisions off the 15-minute chart? You said you check them all.
I do. I check everything because the bigger time frames tell the bigger story. My thing is, when I first started, I went into, when I started learning, I'll take that, because when I first started, I was just like most people, just taking trades from the traders. But when I first started, like really learning the strategy, I went to Dr. K training, and basically, she looks at the 15-minute on the scalping, for the 10 pips and dip, and I learned all this stuff, the 10 pips. So I took a little bit of everything, I learned. I went to her training. Then I was on Stevenson Lindor training when they had that incentive, where he talks about the impulse, the correction, the continuation. you know, and then Jamal, I learned the market structure from Jamal. So I just use those three and kind of bring it into my own, because the average scalper usually use the 1 minute or the 5 minute time frame. That's what a scalper usually do. But because I started learning the cloud, like I said, you don't want to learn too much and confuse yourself. What people usually try to figure out all these different strategies, and then you confuse yourself, and then you get in trades, and then you start to lose, and then you get frustrated and you want to quit. That's because you're trying to do too much all at once. You have to master something first, and then you add on to it. So what I did was I you know, and I'm still not a master of none of this stuff. I mean, yeah, the record is pretty strong, but I'm still not a master of none of this stuff. I'm not a master of the cloud. I'm not a master of market structure. I'm not a master of the naked chart with Stevenson teach. I just took what I saw I needed to know from each one, and I combine it to my strategy, and then I'm gonna ride the strategy until the wheels fall off. If I'm continuously hitting profit, I don't care what type of strategy you have, as long as you're making money, that's working.
Right.
You know, whatever you can be. I'm not now. This is just I'm putting out. But if you could be guessing, and if your guessing is working, then you ride that until your guessing stop working. I'm not telling you to guess,
Right.
but I'm just basically putting it in simple terms for you. You use what works for you, because other traders that use their strategy, basically, they hit negative also. You know, so everybody, you just have to find something that works for you, and find something that works with your time frame. I remember when I first started, man, I used to be so tired because I used to, you know, I'm also a builder, so you know, I used to make sure I wake up in the morning for everybody to jump on Dr. K session at 3 o'clock in the morning. So I used to send a message in the WhatsApp group saying, hey, everybody wake up. Who's on it? Pammy, you on here, right?
Yes.
So I used to basically set an alarm to wake up, and Dr. K used to have 2 sessions. She used to have one at 3 o'clock and then one at 5 o'clock.
Exactly.
So for me, it was like I was basically losing all my sleep.
Me too.
You know, so that was my first thing. I need to find a strategy where I don't lose no sleep. I can continue my day and do whatever I want to do. When I want to pick up my phone and basically trade, I can trade. So I use MetaTrader 4. I use my trading, like if I'm checking social media. So even if I'm not in the trade, I'll look at GJ and say, oh, GJ did this, or GJ's consolidating, or GJ took an impulse. If it took an impulse, then I'm just shooting, I'm getting in there. But that's just how I check social media, or I check my emails. I'll go and check GJ. And if I see something I like, then bam, I jump in it.
Bam.
David, you said you could set the clouds on the MT4?
Yeah, you do the same. You just go to F to the top, depending on what type of phone you have. You go to F, and then you just, that would be indicators. And then you just type in Ikimoku Kinko Hayo.
Okay, thank you.
All right. And I mean, just I mean, everybody who was on there, man, like really and true, like I've invested, you know, in a lot of stuff, and you know, I put a lot of work, man. But if I only been trading 7 months, and I mean, there's now is consistency where I'm turning hundreds into thousands. You know, like it's crazy. I've back test. I've turned $6 into $400. I've turned 500 into 10,000. I've turned, you know, it's all about having your goals and following up with it. You know, you know, I tell people this all the time. A goal without plans is just a dream. So if you set a goal and say, I want to make $1 million, I want to make $10,000 in a week or in a day, you have to have plans behind it. You have to say, okay, I need X amount of pips at X amount of lot size to hit every day, or however, but you have to have plans to back up basically what your goals are. And that's how you make it reality. Like I started out trading pennies. People on there can tell you. I started trading pennies and 2-cent lots and 3 cents, just like the average person that starts off learning. It took time and confidence to build my way up to where, you know, where the lowest thing I trade is $1 right now. If I'm trading under $1, I don't even want to trade. All right. Do we have any other questions before I go into this impulse? The impulse is going to be pretty quick.
Oh, I'm good.
Everybody's good? That's a good thing,
Yeah.
right?
Yeah.
Mhm.
All
Hey,
right. So
question.
say it again.
Question.
Go ahead.
You said you could put your indicators on the phone. Now I'm on it, but it's showing me some numbers because I went on the F, and it's showing like a whole lot of colors
What kind of
to
phone
add.
do you have?
I have a Samsung.
Okay, so you press F, and then you go to main chart, and you go to F plus,
Uh-huh.
and then you type in the search what you're looking for.
Right.
And then when you click on the Ikimoku, the colors is the same. It's kind of the same thing. It should be, the Tekken should be 9, the Kijun should be 26, and then the Seiko span should be 52. And then
Okay.
you just leave it as the default in the phone.
Okay.
Don't change nothing on it. All right?
Okay, thank you.
You're welcome. Let's see here. I'm gonna close this trade out because the same thing I'm looking at, this consolidation. I'm gonna just close this and be happy.
She's still riding down.
Yeah, she's still riding, but I'm more concerned about that. I'm more concerned about how it's consolidating right here, and it's a uptrend cloud. So, and here's the thing. So most people that trains the cloud, they tell you to do not trade in the cloud.
Mm-hmm.
Oh, okay.
But with my back test, I feel like the candles move quick in the cloud, like because you can't really see it. So, like for example, these wicks will be moving and you can't even see it on your phone. But if you have your take profit set, man, you can hit profit real quick. So they say do not trade in the cloud because it's very dangerous. That's why they tell you to wait till the candle clears the cloud on the second candle. But man, shoots.
That's a lot of money.
I like making money, so I'll trade. I trade as long as I know what it's doing. All right. All right, let's go over this impulse. So impulse, look at your notes. In the impulse, what did we say? What do we wait for?
70 to 100 pips.
70 to 100 pips. So now this is where most people get not burned up, but basically confused. So when I look at an impulse, my impulse now, when you trade in impulse, everything we just went over, don't even worry about it. Those indicators is basically for consolidation. Does that make sense?
Okay.
Yeah.
Mm-hmm.
So
Yes.
impulse is basically 9 times out of 10, the impulse is happening during news. Okay?
Mm-hmm.
So simple stuff when you go over the impulse. If I'm looking at straight sell candles or straight buy candles to hit 70 to 100 pips. Now, if you back testing and you new to it, I would wait for 100 pips before you do it. I can use 70 pips because I leverage my account right. So even if it doesn't go back to the 10 pips I'm waiting on, I can basically wait till it corrects. So I would tell you guys circle 100 and wait for 100 before you get in. All right. Now, straight sell candles and straight buy candles is what I call an impulse. So you see how this is all red. This is all sell candles, right? And then you have the wick down here. So what I'm going to do, this is where it started, right here on this wick here. And this is where it ended, at this wick right here. Everybody with me?
Mm-hmm.
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 So we go from here, let's see. Started at 476, 144,624. So 62 and 76, that's about 80 pips, right? Did I do my math right?
So why would it go to that one if it has a buy candle in between?
Oh, you're right. There you go. I was just testing to see if you was paying attention. Perfect.
She was.
I'm glad y'all paying attention. There you go. So we go from this one to this one. So that's what? 81 to 47. So that's about 67 pips. Y'all see it? 81 to 47. Everybody in here should know how to calculate pips. If you don't, then you need to go into IML Academy and watch the basic videos, all right? Or you can watch one of my trainings on calculating pips. So 81 and 47. So if I was looking at my 70 pip, this would be at 67 pips, right? If I wanted to take a chance, I can. So what I would do is, if this is the impulse, it came down 67 pips, which in my indicators is 70 to 100. So 3 pips shy may not make a big difference, right? Because I'm scalping. So what I do is on the impulse, I come back and I do what? I get 10 pips on the correction. So 10 pips from 81 would be 91, right?
Yes.
Did my take profit hit? This is where I would have entered. Hold on a sec. This is where I would have entered. This is my take profit, right? Did my take profit hit?
Yeah.
Yeah.
All right. Now, here's the thing. When you're scalping is going fast, right? Scalping is going fast. So you may come, if we're waiting to get 4 or 5 pips in profit, we may have entered here. This candle may have shot up. You put your stop loss in profit. It may have knocked you out. Come back to the entry. Then it might have shot back up and you do the same thing. So some candles you can get almost 20. I think my record on one candle is 40 pips off of one candle in the 15 minute. And you can go in and out because you're still waiting on that correction. All right. So that's one impulse. Let's find another. Really haven't done no big impulse outside of this one here. Let's see. This is a nice one. And what I'm doing right now, you could go on any chart. And I mean, any pair and do this. Why is this in the way? All right, so you guys see right here is where it started, right? So let's say we say 80 to 100 pips. So that's, come on. So this was at 144.315. So we're looking at 145.315 for you guys to start off with, right? So 145.315 would be 100 pips. 145.315 right here, right? Oh, this was that one that came down quick. I think I called this one. So this would have been scary for some folks that don't understand leverage. Let me tell you why. This is 100 pips right here, right? This is when this is the impulse. So this is about 100 pips, right? And then you may have ended. Now it may have hit because think about it. The candle is going up and down, so it may have hit. So if this is 100 pips, we enter on the correction as a what?
Sale.
And how much pips are we going for?
10. About 4.
4.
Well, no. When we put our 10 pip, our take profit. The take profit is going to be 10.
10, right?
So if my entry point is 145.313, what's my take profit for that?
145.213.
Hello, you're going to be a pro. So this is what I'm looking for. I enter here. I'm waiting for here, right? So if this didn't hit in the same candle, right, as it was going up, because think about it, when it's impulsing, anybody ever seen the news hit? You ever seen the candle when the news hit?
Yes.
And how is the candle moving?
Very fast.
Fast.
Really fast, right? So that means it's going up and down, up and down, up and down. So you may have entered here and it may have hit your take profit or even hit your 4 or 5 pips in profit before it continued to run up, right?
Right.
But let's just say it didn't. If it didn't and we entered here and we enter as a sell where we needed it to come here to make our money, it went up here, let's see, 14531, right? So it went all the way here to 14595, right? Or 96. So it went up 60 pips, right? And then it worked its way back down. And let's say this is the 15-minute candle. So it went up 60 pips. So this 15 minutes, 30 minutes, 45 minutes, and bam, lovely. In an hour, that bugger just shot all the way back down. Now, if you wanted to be greedy, not greedy, but smart, when it hit, it dropped over 100 pips. You could have do the same thing and work it back up and catch it again. If you was fast. But just think about it. You just shooting for 10 pips. So if I'm telling you, you know, my lot size is $4 and $5 or $3, whatever it is, $5 lot size from here to here is $500. Now we talking some money. Trading a dollar from here to here is $100. I'm not worried about all this. Somebody could catch that whole pips in, you know, with a penny or 5 cents or 20 cents and still didn't make what I made in this small portion. The lot size is what tells the story of your account.
After you got the 10 pips, would you have gone back in just based on what the...
No, because I probably would have been intimidated by this big drop after this impulse. Because it shot right back down. I forgot there was news that came out again. So what I would have done, I probably would have waited it out and catch the consolidation here. Because after it caught itself, this was the high. Let me move this stuff here. So after it corrected itself after this big drop here, it came up, it dropped back here, and it came back, right? Then you can say this could have been your high, your low. You could have said this could have been your low, and then I would say up here would have been your high. And then guess what? We back making money doing what? The consolidation.
Consolidation.
It's not that hard, right? Are y'all seeing what I'm seeing?
Okay, can you zoom in a little bit? Okay.
So this would have been your big high and low, right? But even if you wanted to narrow it down, it could have been smaller too, because you only had a few candles that the wicks that really touched the high and the low. But majority of your consolidation was right straight in the middle. So technically, in here would have been your low, and right here would have been your high. So you had really, after this, you had 1, 2, 3, 4 candles that hit you this low here. So basically, that would have just put you in a negative right here for a few, and then you would get back into positive. Does that make sense?
Yes.
All right. Anybody else have any questions? Do y'all need me to go over another impulse?
Yes. Please.
Yes.
Okay. Y'all see it's still consolidating, right? Same thing, horizontal line. Now, here's the thing. If this break this cloud, remember, you're looking at, if it breaks the cloud now, it's in the cloud and it's consolidating. So I'm guessing it probably will break around here or maybe here. Oh, one thing I didn't tell you guys, when you're looking at the cloud, anytime you see dips in the cloud, that means there's a pullback and coming towards the cloud. So for example, let's just say this was a buy up here, right? This is a dip right here. You guys see it?
Yes.
You guys see, even though this was a buy candle, look where the wick was at. So it was going all the way up, right? And then the wick came down. So that was a dip where it came back down into the cloud. There goes another dip. You have a sell candle in that dip. It's usually the candle before the candle that's happening. So you always look at the dips in the cloud. You see there was more dips coming in these clouds, and that's what's pulling the candles back down through. On your phone, it'll be noticeable on the on the dips. Let's see here. See here was a huge dip. You see a huge sell candle. So sometimes I'm looking at the dips in the cloud too. That basically helps me out on the calls. All right. So I wouldn't be surprised if this breaks right here.
Wait, so what does the dips determine exactly?
If the candles are above the cloud or below the cloud, the dips really pulls it back into the cloud, which would be considered a pullback. So let's just say if the candles was below, we would be looking at these dips here to bring it back into a buy.
Mm-hmm.
So all these dips here is really would have these candles coming through into the cloud to go into a sell.
So that dip in front of that last red candle, that doesn't mean anything though.
Which one here?
After the red candle, it doesn't mean anything to us. After the red candle, that dip to your right.
This
On
one
the
here?
bottom dip. I'm sorry, that bottom dip. Yeah, that doesn't mean anything.
I wouldn't be concerned about this bottom dip because my candles are above. But let's say the next couple of candles, and see that's a good point because let's say it breaks the cloud about here. So if it breaks in the next few candles before this dip or even before this dip here, then it would come out to the bottom, right? But what's going to happen? The dip might pull it right back into a buy.
Right.
Because if you look here, you don't have no dip here. Correct. So it's going to do two things. It's either going to pull this back into a buy, or it's not even going to basically break. Or if it breaks, this may push it all the way down because you don't have no dips coming. And that's where you could look at the bigger time frames to really tell the bigger story on the dips also. So if I was to look at the hour and I saw a big dip in that area, then that would confirm what's happening now too.
So that last dip on the cloud, that goes with the last candle? Or is that the future?
Say that again.
So the dip on the cloud, this last one that we see.
Right here or right here?
At the top, the blue line.
This one here?
I'm sorry. If you move it towards the right, like at the end of it, you see that dip right there? Yes, that dip. That's the future or how?
Yeah, that's the future. The cloud is basically creating as these candles work its way this way. So the cloud is going to continuously, every time this go, the cloud will basically create.
Gotcha.
The cloud creates from the candles. So let's just say if this candle just shoots straight down, then this cloud is going to start building down. You'll see a long line, like, let me show you. You'll see something like this.
Oh, okay.
So you see how that was the future, right? But then you see here where it dropped, and then you see that drop.
Okay.
The cloud is created from the candles. We can go back and find another one where it has a huge spike. You see right here? This was the future, right? That's why sometimes you have to have more than one or two indicators, because there are people called market makers that if they see, you know, I mean, this is a $5.3 trillion a day industry. So if they have a lot of folks that's really like, let's say in a buy, if it's overbought, there's market makers that can intentionally cause crap to basically blow people's account. Or they may have a news announcement that can, you know, weaken the currency in that country. So you have to be careful too. That's why you have to use more than one indicator. So like here, if we was looking here, right, in this cloud here, this would have been the future. But we wouldn't have been able to tell this line, this is a cloud. But this line happens because of this impulse.
Okay.
So you have to be careful on that also. That's why they tell you be careful trading in the cloud.
Gotcha.
So I usually, you know, I would tell you stick to, you know, the 10 pips for TPs. And then if you scalping, stick to, you know, getting in profit 4 to 5 pips and you make that money. Just think if you trading, just think when you get to the point where you're trading a standard lot size of $1, 4 to 5 pips, that's 40, 50 bucks. If you do that 5 times, that's 200 bucks. Does that make sense?
Absolutely.
Mm-hmm.
If you're trading $5, you know, 5 pips is $250. So that stuff is real. I almost cussed, excuse me. But that stuff is real.
Is that on a $1,000 starting off account?
Well, so right now I have 7,300 in my account, and I'm trading $3 and $4.
Gotcha.
And that's because I'm doing that to sustain, you know, 200 to 300 pips in a pullback.
Right.
Worst
Gotcha.
case scenario. But it started off at $700 this week.
Wow.
Once I double that 700, then I wouldn't call it over leverage. I guess was smart in the trades I got into. Instead, if I was, you know, I would put an extra couple, you know, numbers on my lot size close to being over leveraged because I know it was already all the market money.
Right.
Like if I really wanted, you know, if I didn't, you know, my goal this week is 10,000, so I'm not too far from it. But if I really wanted to hit 10,000, like in the morning, like I need what, $2,500 more or so, I can really push that to the limit because this is all market money. I can go in there for probably $10 lot size or $12 lot size and hit that in 10 pips. You know, basically 20 pips will get $2,000 if I use $10. And 10 pips is nothing. You guys see what I'm saying?
Mm-hmm.
10 pips is nothing. That's once you realize 10 pips is nothing, and if you leverage right, you would 90% of the time, 98% of the time, all your trades are hit. If you follow the same system, I'm telling you. And it's not me just telling you this. You guys been seeing the trades and you see what I've been doing. You know, so I'm not just calling trades and calling trades. I'm calling trades and I'm getting in the same trades as you guys. So just imagine how much work that is for me. I'm basically calling the trades, then I call it in my phone, go in the group, I post it in the group, then I post the EP, the TP, and then I go back into my trade and modify it and put in my take profit. Y'all see that movement? What just happened?
I didn't see it.
Oh, the red line went down.
The red line
It's
going
starting
up.
to go diagonal down, right?
Yeah.
It tells the story. It tells the story.
Mm.
All right.
So you should watch out for the dips in the cloud.
Oh, definitely. The dips is huge. The dips is huge. If you see dips coming, be careful. Be careful. It's going to pull the candles towards the cloud. It may just pull one or two and then continue to go back in the direction it's going.
So is that like an indicator to wait to get in, or?
Man, it could be an indicator to tell you, hey, jump in for that. So for example, you know, if all your checklist is telling you a sell, right? And you're looking at this dip right here. Let's say before it even happened, right? Because it's telling you. So let's just say you've been watching it all day. It's consolidating here. You see a dip here, you see a dip here, you see a dip here, right? Yeah. Oh, when we look at these dips, you see the RSI was pretty close to overbought, right?
Mm-hmm.
So if you see a dip, you can say, well, crap, I'm going to go in for a sell because I see the dip coming. I know it's going to go down, and I know the RSI got to go down, and then you can confirm it with the crossing also. So sometimes it could be a strong confirmation for you also, like, hey, that dip is coming, I'm ready.
Mm.
Like here, this was a huge dip. You knew something was happening there. That's why we have these longer candles. Right here, you see a dip here. You have a long candle here. You see a dip here, you have bigger candles here. The dips will help you out too in making that decision on knowing what's going to happen. All right. Anybody else have any questions?
David, you said you have a video and all this stuff, or what?
Well, I'm recording this. I hope this will be able to help a lot of persons.
Okay,
But
good.
I'll tell you this. My other scalping strategy video is nowhere close to what I just went over with you guys.
Oh, I realize that.
The only reason I went into
Is
depth is
with
because you guys actually, went out your way and helped somebody today. Most traders will not give all of their nuggets or indicators to you because they want you to keep on coming to learn the strategy over and over. But this is basically what I gave you. I laid out everything I use.
We appreciate that. That's why I'm so tired, right?
So what I would tell you is
we work hard.
Jump in using what I just teach you. Do not jump in live trades with it. Practice a demo, back test it for about a week or so on everything you just went over. And then you can go live and make a journal. If you jump in 10 trades, you need to go at least, we said, what did we say in the beginning? 60-40, right?
Right.
So if you say, okay, I'm gonna call 10 trades on this new strategy, you need to hit profit 6 times and lose 4. Worst case scenario, before you can say, okay, I got it. You get 10 for 10 or 9 for 10, kudos to you. You need to at least start with a 60-40 ratio, basically that 20%, and using the same lot size because you want to basically still end up at the end of the day with profit. All right?
Sounds good.
Does anybody have any questions?
How can we get a copy of this recording?
Well, this is a long recording, so it's going to be loading for probably an hour or so. What I would do is I would send it to you. Just send me a message, however you send me a message in WhatsApp or Telegram, or however you message me before, whoever. And probably by the end of the week, maybe by tomorrow or Friday, and I'll personally send it to you. I just wanted to make this session different because everybody did something special today.
Thank you so much. But it was awesome. Thank you.
Thank you.
All right, so make sure you shout me out on Facebook or in WhatsApp or in Telegram. And then what I'm working on too, I'll probably be calling some trades. I have a Telegram group also. If you want to be added to that, I'll probably send you the link for that. But I'll do more trainings and basically calling pips in that group also.
Great.
All right, so
Is
just
the
message
Telegram
me.
group the Mr.Gj?
Yeah, it's basically this one. I think this Telegram is called Mr.Gj.
And Quiet Storm?
No, not that one.
Pip walking?
No?
Yeah, Pip walking. Mr.Gj Pip walking. So yeah, if you want to be added to that, just send me a message and I'll send you the link. And then I'll send you that. And then also just shout me out on Facebook, Telegram, WhatsApp. And if you need anything, questions, answer, whatever, just let me know. All right.
Thank you so much.
Is everybody else
Thanks,
okay?
David.
You're
good.
David.
Thank you.
Thank you so much.
Everything was great. Awesome.
Thank you
All
so
right.
much.
You guys have a great day.
All right.